Hi, in this video, we will solve the third complete comprehensive example. So let's go to the example sum. Example sum. From the following particulars relating to Ramakrishna Mission Charitable Hospital, prepare income and expenditure account for the year ended 31st March 2019 and the balance sheet as at that date. To the left of the screen, we have the receipts and the payments account given, and on the right, we have the additional information. We have particulars of items along with their balances at the beginning of the year, which is on 1st April 2018, as well as the balances on 31st March 2019, which is the end of the accounting period. So we'll begin by preparing the working note, which is the opening balance sheet. Working note. Balance sheet as at 1st April 2018. On the left side, liabilities, and on the right side, assets. We'll begin by writing down all the balances which is given in the additional information. We will take the balances on 1st April 2018 and put it in the opening balance sheet. Subscription due, it's an asset. ₹2,400. Subscription received in advance is a liability. ₹640. Stock of medicines, asset. ₹88,100. Equipment, opening balance ₹2,12,000. Building, ₹4,00,000. The additional information is done. We'll move on to the receipts and payments account. The opening balance of cash on 1st April 2018, it's given as ₹71,300. So cash in hand on the asset side of the opening balance sheet, ₹71,300. We'll move on to, there's an interest on investment which we received ₹70,000. The amount of investments is not given. So we need to find out, assuming that the investments is depicted as X. So at the rate of 7% of the investments of X, we are getting an interest of ₹70,000. Therefore, the value of the investments should be ₹70,000 divided by 7%, which is equal to ₹10 lakh. Since we've received the full amount of interest at 7%, ₹70,000 in this accounting period, we must have had the investment at the beginning of the year itself. So I'll put that in the asset side of the opening balance sheet. Investments, ₹10 lakh. There is no other item on the payment side which needs to come to the opening balance sheet. So we will balance the opening balance sheet and find out the opening capital fund. The greater total is on the asset side. The total is 17,73,800 rupees. So we need to subtract the total of the liability side, 640 rupees. We are left with 17,73,160 rupees. So that is the opening capital fund. ₹17,73,160 rupees. We'll move on to the income and expenditure account. Solution. Income and expenditure account. For the year ended 31st March 2019. Left side debit side, right side credit side. Expenditure. Rupees. Income. Rupees. We'll begin with the additional information. We need to prepare subscription account to find out the amount to be credited to the income and expenditure account, as well as the medicines account to find out the cost of medicines consumed. Also, after preparing the equipment account and the building account, we will get the amount of depreciation. So we'll finish preparing these accounts as part of working notes before we continue with the income and expenditure account. Let's begin with the subscription account. Subscription account. The opening balance of subscription due 2,400. Assets comes on the debit side. To balance brought down 2,400 rupees. And the closing balance 2,800 rupees. By balance carried down 2,800 rupees. The opening balance of subscription received in advance 640 rupees. By balance brought down 640 rupees. And the closing balance 1,000 rupees. To balance carried down 1,000 rupees. The total subscription received in the current accounting period, we can take it from the receipt side. It's given as 4,79,960 rupees. So by bank 4,79,960 rupees. The balancing figure is the amount to be taken to the income side of the income and expenditure account. Let's balance it. The credit side has a greater total. ₹4,83,400 is the greater total. We need to subtract 3,400 rupees. 4,83,400 minus 3,400. we are left with 4,80,000 rupees to be taken to the income side. So this amount needs to be taken to the income side. We'll continue with the other accounts before finally posting it. Stock of medicines account. There are no balances of creditors for medicines, so we did not prepare that account. There are no credit purchases being made. The opening balance of stock to balance brought down 88,100 rupees. By balance carried down, closing balance of stock of medicines 97,400 rupees. Amount of medicines purchased, we can get the information from the payment side of the receipts and payments account to bank for purchase of medicines 3,05,900 rupees. Items are done. The balancing figure is on the credit side by cost of medicines consumed. Totaling up the debit side. Totals to 3,94,000 rupees. We need to subtract 97,400 rupees. It's 2,96,600 rupees is the cost of medicines which are consumed. So this needs to be taken to the expenditure side of the income and expenditure account. We'll continue with the equipments account. Equipment account. The opening balance to balance brought down 2,12,000 rupees. The closing balance by balance carried down 3,16,000 rupees. There is no sale of equipment because there is no item of equipment on the receipts side of the receipts and payments account. However, from the payment side, we can get that we've purchased equipment for 1,50,000 rupees. So to bank for the purchase of equipment, 1,50,000 rupees. The balancing figure will come on the credit side of the equipments account, and the balancing figure would be depreciation. The greater total 3,62,000 rupees, and by depreciation 3,62,000 rupees minus 3,16,000 rupees. We get 46,000 rupees as depreciation on equipment, and this needs to be taken to the expenditure side of the income and expenditure account. The next working note is building. The opening balance to balance brought down 4 lakh rupees. Closing balance of building by balance carried down 3,80,000 rupees. There are no other items for purchase or sale. We'll balance the account. Greater total 4 lakh rupees, and by depreciation to be taken to the income and expenditure account is 20,000 rupees. So we'll post these items starting from subscription into the income and expenditure account. The first part of the screen is the income and expenditure account, and the bottom half I have kept the working notes. By subscription account, ₹4,80,000. Next is the stock of medicines consumed to be taken to the expenditure side. 2 stock of medicines consumed. Amount 2,96,600. Depreciation on equipment as per the working note, 46,000 rupees to depreciation on the equipment. ₹46,000, and depreciation on building is 20,000 rupees. The total depreciation 66,000 rupees. Now we will bring the income and expenditure to the bottom half of the screen and scroll up to the top for the question. The other items which are left out from the receipts and payments account needs to be inserted. We have a donation to be taken to the income side. By donation account, 1,45,000 rupees. We have interest on investments which have been received. By interest, 70,000 rupees. Also, we have proceeds from charity show. ₹1,04,500. On the payment side, 2 doctor's honorarium, ₹90,000. Salaries, ₹2,75,000. Petty expenses, ₹4,610. The equipment is a capital expenditure. It will affect the closing balance sheet. And finally, 2 expenses on charity show. Amount 7,500 rupees. So we are done with the income and expenditure account. Let's balance it. I'll total up the credit side first. The credit side totals to 7,99,500. and the debit side totals to 7,39,710. So I'll put the greater total on both sides, 7,99,500. And on deducting 7,39,710, we get 59,790 as surplus balancing figure. So this is the income and expenditure account. We'll go on to the closing balance sheet. Balance sheet. As at 31st March 2019. Liabilities. And assets. We'll first insert all the balances which are given in the additional information. We'll take the balances as on 31st March 2019. We'll begin with subscription due 2,800 rupees. Subscription received in advance 1,000 rupees. We have stock of medicines 97,400 rupees. Equipment, the closing value is 3,16,000 rupees. Building, 3,80,000 rupees. The additional information is done. We'll move on to the receipts and payments account. On the receipts side, there was an item of investments of rupees 10 lakh, which we haven't sold this year. So investments, 10 lakh rupees. And on the payment side, the last item, cash in hand at the end of the accounting period. Cash in hand, 37,750 rupees. So we'll insert the capital fund, the opening balance, and add the surplus for the accounting period. We'll do that after removing the split. So the opening capital fund, 70,73,160 rupees. ₹17,73,160. And the amount of surplus, it is 59,790 rupees. 59,790 rupees. So we have the total in the outer column, 18,32,900 50 rupees. Let's total the balance sheet to check if it tallies. The total of the liability side, 18 lakh 33,950 rupees. And the total of the asset side is also 18 lakh 33,950 rupees. That's the example sum at the top. The opening balance sheet. This is the opening balance sheet where we got the opening capital fund as 17,73,160 rupees. This is the income and expenditure account where we got the surplus as 59,790 rupees. And the closing balance sheet where the asset side tallied with the liability side with 18,33,950 rupees. These are the working notes. This is the subscription account, the stock of medicines account, followed by the equipment account and the building account.